In this video, we're going to be taking a look at what's been going on with the median home price in most of the major Southern California counties, and then just also quickly giving you an update on the 30-year fixed rate mortgage, which has come down over the past couple of days. I'm Tim Hamilton with StellarQuest Real Estate. If you're thinking about buying or selling a home in Southern California, you can reach out to me anytime. You can find all of my contact information in the description below. I'm more than happy to answer any of your questions and let you know what I can do to help. So starting here, we're going to look at the median home price data, which we get from InfoSparks, and they get their data directly from the California Regional Multiple Listing Service. And what we're looking at here is the median sales price for single family homes, townhomes, and condos for each of these counties. And we're going to start with Orange County. In January, the median home price was $1,080,000, which jumped up to $1,105,000 in February. So that's a 2.3% increase on a month-over-month basis. And year-over-year, home prices are up 14.5% in Orange County. Now, I will kind of interject a quick note here when it comes to the year-over-year price gains. Since in the second half of 2022, we saw a pretty substantial drop in the median home price. That means we started last year, 2023, relatively low and then saw substantial gains throughout the year. So you'll see these large year-over-year price gains, but keep in mind as we move through this year, if home prices don't go up significantly, each month, then eventually the prices from 2023 are going to kind of catch up to 2024, and these year-over-year gains are going to start looking a lot smaller as we move throughout the year. So now moving on to Los Angeles County. In January, we had a median home price of $835,000, which jumped up quite a bit to $870,000 in February. So month over month, that's a 4.2% gain. And the median home price is up 10% on a year-over-year basis in Los Angeles County. Now looking at San Diego County, in January, it was at $837,263, jumping up to $886,500 in February. So that's a 5.9% gain on a month-over-month basis. And year-over-year, home prices are up 13.6%. Now looking at Ventura County, in January, the median home price was $837,000, which jumped up to $845,000 in February. So we had a small gain of about 1% there, but home prices are still up 12.7% year over year. And now we have Riverside County, which in January, the median home price was $580,000. Jumped up to $605,000 in February. So month over month, that's a 4.3% gain. And year over year, home prices are up 7.5%. And lastly, we have San Bernardino County. In January, the median home price was $504,215, which actually dropped to $500,500 in February. So that's a 0.7% decrease on a month-over-month basis, but year-over-year home prices are still up 2.2%. So overall, we have every county except for San Bernardino County seeing pretty solid month-over-month price gains. This is the time of year where we typically do see the largest amount of appreciation in the spring, particularly March through May. So it's going to be interesting to see what happens to home prices throughout the year, particularly if mortgage rates do start dropping, which many forecasters are anticipating. So we're going to get into the mortgage rates next. But before we do that, I just wanted to quickly mention that all housing markets are local, and county by county data is pretty wide. A lot of these counties are very large. So if you're curious in finding out what home prices and home values have been doing in your specific city or even your specific neighborhood, let me know. We do offer free home valuation reports, so I'd be more than happy to send you a lot of really great information about the homes that have been selling right around in your neighborhood. So if that's something you're interested in, just call, text, or email me. All of my information is in the description, and I'm happy to help you out with that. And lastly, we're going to take a quick look at what's been going on with mortgage rates over the prior month. And we're going to start by looking at a chart from Mortgage News Daily, taking a look at the 30-year fixed rate mortgage. And this graph assumes that the buyer is not paying any points or fees to get the loan. So this rate is slightly higher than what you would probably get if you were to pay points or fees, which most people decide to do just because it does get them a slightly better interest rate. And so you can see that rates kind of jumped up above 7%. That was kind of on the back of getting some slightly higher than expected inflation data, which caused people to think that the Federal Reserve might keep interest rates higher for longer. And now you can see that over the past week or so, rates have kind of come down just ever so slightly back down below 7% according to Mortgage News Daily, and that is because Powell came out and kind of reaffirmed that they still are expecting to do some rate cuts this year. So we don't know exactly when those rate cuts are coming, but this is something that, lenders are always keeping an eye on and trying to determine and decide where they should be pricing their loans at. And so now we're just going to quickly look at the Freddie Mac Primary Mortgage Market Survey, which is another one that people like to look at. And this is a little bit different because this is a weekly average. The Mortgage News Daily is a day-to-day fluctuation, whereas this is published on every Thursday of the week. And you can see that Freddie Mac was quoting a 6.88% weekly average for the week leading up to March 7th. And a lot of their information does include points. So, typically the Freddie Mac number is about a 1/4 percentage point below what Mortgage News Daily is quoting. And that is because they are including, assuming that the borrower is going to get some sort of, pay some sort of point or fee to get the loan. So that's it for this one. If you have any questions, let me know. More than happy to help you out with that, and enjoy the rest of your week.